Hi, my name is Chris San Jose. I'm the president of lending at Yale Advisors. I co-founded the company with James Cook in 2012, and I've since been originating loans for manufactured housing and RV parks nationwide.
Hi, I'm Jake Levin. I'm the Director of Equity Capital Markets at Yale Advisors. I joined the firm in 2022. I bring over 20 years of real estate development and capital markets experience to the table, and my job is to bring investors to operators so they can have a great partnership for the long term.
So Yale Capital is focused on manufactured housing and RV park financing exclusively now for just a little over 10 years. We've arranged loans from $1 million as high as $200 million credit facilities and everything in between. We work with all the different sources that are available to our industry, which include Fannie Mae, Freddie Mac, CMBS lenders, life insurance companies, and small, medium, and larger bank platforms. So one of the best parts about working with us is we don't require an exclusive agreement. There's really no cost added to you exploring our options. We work on a performance basis. We're going to bring your loan to dozens of lenders that are potentially the right fit for your deal. And if you decide to work with a different bank that you already might have had a relationship with, this process costs you nothing. Really, we can only add, we can't take away from your goals. We run a process where you can ensure that you've turned every stone by the time you select a bank or an offer. Have direct relationships with their local banks or one particular Fannie Mae lender they might have worked with, but until you reach the entire market and solicit offers from several banks, you really don't know if you have the best offer. And if you're working with a bank for the first time, you really haven't ensured whether that bank has the experience needed to originate a manufactured housing loan, knowing the right questions to ask, which ones not to ask, which third-party lenders they should work with, and really avoiding all the different obstacles that can come up during these loans. While it may not be rocket science, there's actually a surprising amount of issues that can arise during a loan, and having experts on your team to manage through those problems can ensure a quick closing and a successful closing. What borrowers realize later in the stages of working with a direct bank is that they really haven't explored their options, haven't ensured that they're working with a lender that has a tailored approach to manufactured housing, whether it's the vendors they're selecting, the attorneys they're working with, or the credit officers that have to approve important decisions. Running a process through our database of lenders who have all worked with manufactured housing or RV parks before really ensures that you're going to have a smooth closing with all the right parties involved. The Yale Capital Division has a track record of essentially establishing relationships for very long periods of time. It's rare that we work with someone only one time. Operators that are purchasing communities, refinancing their portfolio, continue to come back to us after we've had an opportunity to work with them once. And I think some of those reasons are just a very thoughtful and careful approach to managing their financing over a long period of time, whether it's short-term loan strategies, long-term loan strategies, building in flexibility, building in earnouts for a portfolio that's increasing in value. We take a very sort of preemptive approach to how we handle clients' financing needs.
We specialize in the $2 million to $200 million limited partner investor. That can be on a deal-by-deal basis or a programmatic relationship. So we're happy to assist with any and all the equity needs that you have.
So one of the things we're really proud of on the Yale Capital side is we have a 99% closing ratio. So out of 300 plus loans that we've done, we've literally only had probably 3 or 4 loans that have dropped out for reasons that were really outside of our control. I think this really speaks to our process of being very diligent and thorough up front and being honest and very realistic about what the right approach is. We've had many situations where other operators might have solicited a little bit of our initial feedback, decided to do something different, take a different approach, and come back to us because their approach was just a little too difficult to accomplish, where we had a solution that was very practical, was possible, could get done on time. A good specific example was a portfolio where somebody had 10 properties they needed to refinance into a larger acquisition. Each of the properties had varying degrees of situations, from low occupancy, high park-owned homes, tougher locations. But by the end of the process, we were able to find the right lender who was able to recap that portfolio and roll it into a much larger acquisition on time with very attractive terms. Another example was a refinance where another broker had taken a borrower to Freddie Mac, had not disclosed a lot of the very important details about the transaction related to the park-owned homes and some other legal issues. They brought it to us 45 days later. We had that loan closed at significantly better terms with more interest only, lower interest rate, and higher loan proceeds.
So every day my job is to contact operators and investors alike and learn the different criteria both on the investment side and the operating side, make introductions between those two groups and find the best marriage between the operator and the investor. And the reason we really launched the division was because the group was constantly getting inundated with investment interest from limited partners who wanted introductions to great operators based on their investment criteria. So a great reason to work with us is that we're going to run a process for you and introduce you and take you to the market so that you can find the best partner for you for the long term that matches your operational strategy based on various criteria, be it strategy, geography, net returns, control rights, hold period, et cetera, et cetera. Try to find you the best partner for the long term so that you can be out of the fundraising business and go back to what you love doing, which is buying and operating parks. Many of our clients already have existing investor relationships, often in the retail channel or with other institutional partners. But our job is to survey the market and see if there's a better solution out there, be it bigger check size, cheaper capital, more aligned with your investment strategy or hold period or control rights. And it costs nothing to work with us. We're strictly success-based and we are non-exclusive. And I would also highlight just one example where an operator came to us. He had struggled to raise $6 million in the market on his own. Within 3 months after running a process for him, we successfully got a commitment for $27 million from one institutional investor to go buy parks together over the next 3 years. And so now he is off to the races with a tremendous partner for a long-term future. These are all the reasons you should consider working with the Yale Capital Advisors team. We look forward to working with you to find the best debt or equity solution available to you in the market. So give us a call.